Hello world, hello traders. Happy New Year's from WinMoreForexTrades.com. My name is Joshua Logan. I'm kicking off the new year by giving you a free gift from the 7 simple techniques to winning more Forex trades. Now this is the video 5 of my 7 video series in the 7 simple techniques to winning more Forex trades. But as the new year 2019 kicks off, I want to give you guys this free videos, video 5 of the 7 videos, and it talks about Fibonacci's. You guys can also get the free download of the ebook to the Fibonacci's and how they work. And actually it's 2 gifts, but you guys are really going to enjoy this. But all I ask you to do is just watch the video. It's the free video. This is video 5 of the techniques. And at the end of the video, you guys be sure to go to winmoreforextrades.com to download your free ebook to Fibonacci's and how to trade them. Enjoy. Alright guys, welcome back. We're in video 5. Alright, right now we're going to start talking about Fibonacci's and how we use them in the markets and how you properly trade them. Now, excuse me. Now, when it comes to Fibonacci's, man, Fibonacci's is pretty simple, but it helps you find good entry points and good exit points. So, what we're finna do, we're finna get into it right now. Now, when you start a Fibonacci, you want to start it at the lowest point of a trend, and then you want to take it to the first highest point in that trend before the market retraces. So this would be the lowest point. A proper low would be explained as 1, 2 candlesticks to the left, 1, 2 candlesticks to the right that are higher than this center wick low. That is what's called a proper low. And this is what's called a proper high. You got 1, 2 candlesticks to the left, 1, 2 candlesticks to the left, 1, 2 candlesticks to the right. That's lower than center wick high. So that's considered a proper high. So what we're going to do is we're going to take our Fibonacci tool and we're going to spread the Fibonacci from that low to that high. So this here is now, that's our A low, and there's our B high. Okay, so when it comes to Fibonacci's, basically the market will bounce off of one of these red lines, and once the market starts to extend after the retracement, we'll trade it to the 1618. Then if the market retraces down into the 786, this blue line, we will trade it up to the 127. Or if the market comes down to the 86, we will trade it to the 118. Now it doesn't always fall perfectly like that, but that's the idea of how you would want to trade a Fibonacci. And whenever you enter a trade, you'll enter a trade off a counter trend line break, and then your stops will go 10 pips below the A, or 10 pips beyond the A. So let's see what happens. And right now we have a 5-0 retracement. Let's see what the market does. Okay, so we have our first entry. There's our first entry. Just bring it across the top of the candlesticks. We have a counter trend line break right here. So we would have bought the market at the close of this candlestick. Now this is the 4-hour time frame, and that is a lot of pips that we missed out on. So you can use this on the 1-hour time frame. You can use Fibonacci's on all time frames. They work best, but the higher the time frame is, the better the Fibonacci's work. So we would have entered at the close of this candlestick, so we would have got in here. So let's see what the market does. Oh yeah, and we are exiting out at the 1618 since we have a 5-0 bounce or the 5-0 retracement. So we're going to the 1618 extension. So let's go ahead and mark that. All right, there's our take profit. Now we're 10 pips below the A, so we don't get stopped out. All right, so the market, bang, goes right up, hits our take profit. We entered here. That's a pip countage of about 98 pips. So there's your first trade off a counter trend line break with a 5-0 retracement bounce. Entered here, 98 pips, 100 pips. Okay, so now the lowest point of the trend, no, the lowest point of the retracement, now that becomes our C. This is our C. And this is our D right here. And remember, the proper high is 1-2 candlesticks to the left and 1-2 candlesticks to the right. That's lower than central wick high. So the market continues to go up, then it comes back down and making a proper high. So here's our D right there. There's your trade. So you'll wait for the market to make a proper high. Now we're going to move the Fibonacci's. So this A, this C becomes the new A. So now we can get rid of the C. This is your new A now. And this B, the D becomes your new B. Like so. Then you'll take another Fibonacci. And you'll stop there. Hold on, guys. Alright, guys. Sorry about that. Alexa want to talk a lot this morning. Okay, let's see. No, where were we? Alright, so we moved. So the Fibonacci, this first Fibonacci has fulfilled. 618 extension. Our target has been hit. We have 98 pips. The C becomes a new A, and the D becomes a new B. We spread it a new Fibonacci. Okay, so we can get rid of this. We'll get rid of this Fibonacci right here. It's done. We made our trade. Good trading. We took our profits. Now we're going to the next trade. Okay, we have our A. So we have our B. We have our AB boundary. The market has retraced. Okay, we bring in counter trend line. Just bring it across the top of the wicks, like so. Okay. Keep going, keep going. Okay, wow. Uh-oh. What we do here? Keep forgetting to reset my tools. Okay, let's get rid of that. Okay, let's bring this out. And that would have been our counter trend line break. Okay, the market would have closed above our counter trend line, bullish. So we would have got in at this candlestick here. So let's go ahead and mark off. Let's go ahead and mark off our exit. This is going to be our exit. This is where we're going to take profits at the 1618. So now we have an entry here. Okay, let's see what the market does. Boom. There we go. Bang, right there. So we have another successful trade where we entered here. And now the market has hit our profit. Take profit. We have 84 pips. So now we wait for the market to make a proper high. And here's our proper high right here. We have 1-2 candlesticks to the left, 1-2 candlesticks to the right. That's lower than central wick high. Now these are like double tops, so you can use the middle one. So there's 1, 2 candlesticks to the right, 1, 2 candlesticks to the left, lower the century high. There's your B, or there's your D. There's your C retracement, and there's your D extension. Okay. So how many pips was that again? That we got? So we enter here, and we exit there. So that's 81 pips. So first trade was a 98 pips. Second trade, we got 81 pips. Okay. So now remember, the C becomes the new A. We'll get rid of the C. And the D becomes our new B. So this Fibonacci has been good trade. Stops were beyond the A. We didn't get stopped out. We took our profits. So we get rid of all of this. We enter the counter trend line break. Okay, now we have a brand new Fibonacci swing. We're going to start from this low, and we're going to bring it to that high, like so. Okay, now let's see what the market wants to do. Now it didn't give us much of a retracement, but the market decided to come up anyway, and we already have our first entry. Counter trend line right there. The market closed above, so we're already entered here. So that's our first trade. So we will be exiting out at the 1618. Okay, let's mark the 1618. All right, let's see what the market wants to do now. Okay, we have our entry. Market goes sideways. It's going up. The market's going up. It's coming down again. Market's moving waves. They don't move in straight lines. So the market is just waving, making its wave movements. We're still holding the trade. Still holding the trade. So now at this point, you can see back here, because this is the 4-hour time frame. Back here, Monday was September 18th, 2017. We've moved up all the way to October the 2nd. This is October the 2nd. We're still holding on this trade. So we've been in this trade for almost 2 weeks now. But we're still holding our trade. We're still holding our trade. Market wants to come down. Now we have a deeper C. And there's your deeper C right there. But let's just see what the market's going to continue to do. It waves down, comes up. Market's making waves, still making waves. Now we actually found a deeper C here. And at this point, you can start adding to your position. You have another counter trend line break here. There's your counter trend line break. You would have entered there. So now we have 2 trades. Now let's see what the market wants to do now. Market's still making waves. It's okay. It's okay. We're still holding on to our trade. Then ultimately the market, bang, right there. Find our proper high. There's our proper high. 1, 2 candlesticks to the left and 1, 2 candlesticks to the right. So good trading. Our stops were below the A. The market took out our take profit. And we had entered here, the close of the candlestick. So there's one trade, 355 pips. Then you have another trade where you would have entered here at the close of this candlestick. So there's another 498 pips, guys. 498 plus, that's 500 plus 355. So that's 800 pips right there in this one move. Now it took a while because still this is October 24th, 2017. Now remember, it's September. We entered in September 18th. Our take profit didn't get hit until the 24th of October. So we were in these trades for a whole month. But you got your 800 pips, standard lot. That is standard lot, 800 pips. That's there's $8,000. Now that's just one currency pair, guys. The GPB CAD. That's $8,000 in 1 month off of one currency pair with 2 entries off of counter trend line breaks, holding our trades using Fibonacci bounce. Fibonacci's bounce off of 382, and then we took our profits at the 618 extension. Okay, let's go. Let's do it again. Let's do it one more time, and then I'll show you guys how to automate it using the Smart Trader charting system. Okay, there's your C, and there is your D. Okay, so now we're ready to move our Fibonacci's. This A or C becomes the new A. Then we get rid of this, and the B becomes the new D. When we get rid of the D, now we can spread our Fibonacci tool. Come on, we spread our Fibonacci tool from the C, that's our new A, up to the D, which is the new B. Okay. Now we can get rid of all of this. Good trade. We took profits. Hold on. Reset tools. We held on to our trade for a month, and we just monitored. We didn't do anything. We didn't touch anything. We just let our trade play out, and we ended up getting 2 trades with 800 pips. $8,000 for the month just off of one currency pair, guys. Just one currency pair. And this Fibonacci's work on all currency pairs. Now what's going on here? Let me get rid of this one. Okay. All right. Oh yeah, that's right. I'm sorry, guys. Let me get rid of this. All right, we already have a retracement. That's we have our A to B boundary. We have a trend line. We have a counter trend line, like so. Okay, let's see what the market wants to do. Okay, we have a counter trend line break right here. Here's our counter trend line break. Right, the market closed. Let's see. Okay, in this instance, now the market would have closed bullish here over the counter trend line. I still would have entered here at this next candlestick. So we have our first entry. And remember, our stops go below the A. So we have a take profit at the D extension, the 1618. This is going to be the D extension. We found the C, so we have our A, B, C, Fibonacci movement. Now we're just waiting to go take our profits at the 1618. Okay, let's see what the market wants to do. Up and right then and there. See, that's why we place our stops 10 pips beyond the A, so we won't end up getting stopped out. Now, if we would have put our stops up here, we had a tight stop, which I know a lot of traders trade with. Boom, the market would have came back crashing down, would have stopped us out, but still, we're just at a 382, and we're still going into the same take profit. So that's why we put our stops below the A. 10 pips below, beyond the A. As long as the market doesn't take out the A, it has no choice but to go your way. So we have a deeper C. Let's make it a little bigger here. All right. We'll have a deeper C. The market just sits in waves. Now we have another entry here. Let's cross the top of the candlestick wicks. Okay, we still would have entered here, counter trend line break bullish. So we would have entered on that market. That trade would have went against us. But we would have had a third entry, counter trend line break there. We would have entered here. Then we had another trend line break. So we would have entered the market there. So we had 1, 2, 3. We had 4 trades that were some probably in the negative, some probably in the positive. And we know this trade is in the negative because we entered here. The market's way down here. But of course, as you can see, the market does eventually go up in an uptrend. So now at this point, all of our trades should be in profit right now. So we're still holding our trades. And let's see what the market does. The market continues to wave. The market does what it's going to do, regardless. And then the market just starts to shoot directly northward and just takes out our 1618, the extension. Now we have 1, 2, 3, 4 different trades. We have 4 different trades. That's a 532 pip trade there. Oh, excuse me. There's 500 pips there. There's another 593. So you might as well say 600. And there's another 700 pip trade. We would have entered here again. There's another 700 trade. So guys, we're talking about 14, 13 plus 5. Almost 2,000 pips in one Fibonacci wave movement with our stops below the A. With 4 entry points on counter trend line breaks. As long as we're getting counter trend line breaks, we should have been entering the trade. 2,000 pips, guys. That's a lot of pippage. And trading at a micro lot, trading at 1 micro lot, that's $200. Trading at a mini lot, that's $2,000. Trading at a standard lot, that's close to $20,000. And that's just you placing trades at counter trend line breaks, using Fibonacci's, bouncing at the 5-0 retracement level, and exiting at the 1618 extension. And guys, that is how you want to use Fibonacci's when it comes to the Forex market. And you can see how profitable it is when you use this tool. Okay, we're going to kill the screen to show you guys how to do this automated. Now, with MTI, they have this, MTI has this thing called the Smart Fibs. It's just like with the Smart Trend Line. You just bring it under the lowest point of the trend, click it, and then it draws all the Fibonacci's for you. And then it does it the same way that we did it. The proper lows and proper highs, 1, 2 candlesticks to the left and 1, 2 candlesticks to the right. And then you can see right here, you had 1, 2, 3, 4, 5. You had 6 Fibonacci's that fulfilled in this uptrend. And if you were following the Fibonacci movement, you would have been able to take some profit along the way of this uptrend. Now that's a lot of pippers, guys, but that's how you want to do Fibonacci's. In the next video, I'm going to talk about crown formations, and we're going to draw them up, and then we're going to find them in the live market. I'll see you guys in the next video.